Hi friends, Simit here from InformedTrades.com. Today is June 10th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the market, all as a part of helping traders learn. If any of the information I'm presenting to you is unfamiliar to you, check out InformedTrades. We have a huge archive of learning material that covers not only my method of trading, price action, swing trading in the Forex market, but many other styles of trading, many other markets. Check it out. Register as a member, set up a practice account, share your trading experiences, share your trades. We can all learn together and learn from each other's mistakes and successes. Okay, let's take a look at the charts. Let's start with gold. Okay, so far gold is rallying. So here is just, to me, the technical analysis lesson here is, I've said it many times before in these videos, small candlesticks precede big candlesticks. Here we have what is almost like a double doji pattern. First price declined pretty significantly. We see the acceleration rate of the decline slowing down. We see that hockey stick type pattern. And then right here we have a doji and we have another small candle. That could be an entry signal, especially if we're at support. Now, moving averages are still bearish here. I'm looking at gold from a long-term perspective. I expect the market to reach, to go well into new all-time highs, but well beyond the highs reached in September of 2011. So I'm just buying for the long term, and I'm happy to buy between 1180 and 1280. Short term, the bearish argument is that we're still below the moving averages. Price is still they're trending down. But we did have this. This was a great, real sign of exhaustion of a bearish trend, a potential reversal. I think that once we hit 1280, we may get bears coming in defending that level. So for the short-term traders, that's sort of my expectation. And once we hit 1280, if I got long here, I would definitely look to take some profits here. If I were short-term, of course, I have a longer-term mentality, and I'm just buying between 1180 and 1280, and we'll see how much higher it goes. Okay, so that's sort of gold. Next up on the list of trades is, let's go to Aussie yen, actually, because this is the one adjustment I made to my account. And so I had my take profit order up here, and I actually took profit down here as well, because I moved to break even. I saw some partial reversal here, the resistance here. Now I'm actually taking the remainder of my position off, and I thought about maybe wanting to hold on to the yen for the long-term fundamental reasons, but I'm just seeing yen strength in many other pairs as well, and we'll get to Kiwi yen, which I shorted yesterday. So I thought now's a good time. We're approaching this resistance. We're basically at this resistance level. We have a hanging man pattern, and this looks like a bearish candle. It hasn't finished yet, but it looks like it could end up being a doji. So we're in that supply zone. We have reversal candlesticks. I took my profit on this, and I closed this trade out. So I'm fully out of Aussie yen. Let's close that out. Okay, now next up, Kiwi yen. Speaking of Kiwi of the yen, so here, my stop is at 87.95 here, and it turns out, I moved my based on how the candlesticks were appearing, I moved my stop and my entry order down a little bit, although then price rallied. So actually, if I kept my entry order where it was, that would have been better. I should have kept it at 87.35 or so, instead of moving it down to 87.02 or 87.10. But that's okay. In any event, I do still think this looks like a bit of a reversal candlestick. We see a longer wick here on this candle, on today's current candle, which isn't closed yet. Let's see what it looks like on the 4-hour chart. Yeah. So on the 4-hour chart, we see this big, and this is a resistance level. Let's actually plot that. So on the 4-hour chart, this orange line here is a resistance level. It goes back to May 9th, and then again May 16th. So once price came into that level, big red candle. So that tells us, or that one interpretation of that is the bears are stepping in at this level. So that's reassuring for my position. But also, I am seeing yen strength across the board. Like that Aussie yen pattern. It was running into resistance. The candlesticks were showing reversal signs. Here we have that long wick pattern on the 4-hour chart. We can see it really responding to this resistance level here. Excuse me, or resistance and formerly support here, and even going back here. January. Okay, so this is a key level that we're at, and I entered a short here. So far so good on that, or it's a little out of the money, but I think the logic is still there, and I'm satisfied with the price action. Aussie dollar, I don't think we finished looking at that. Australian dollar is still rallying against a number of pairs. The U.S. dollar is definitely one of them, as we can see here. So I'm just holding on here. I haven't taken anything off since I entered here, so that's fun. Let's see if we can get. We are getting closer to the target profit. Let's see if we can hit that, and that'll close out. Or let's just. There's nothing really to do on this. I'm in this trade, just watching at the moment. Pound U.S. dollar. I'm long pound U.S. dollar here, and we see so there's a nice rally so far today. My stop is actually at break even, so I almost got stopped out. It looks like the lines here are really thick, so it looks like I got stopped out. Let me make sure I save this, but I actually didn't. So I came very close to getting stopped out. I mean, if it had hit my stop, it would have been at break even, so I wouldn't have lost any money, but I still would have gotten stopped out. But that did not happen. It just missed by a few pips. That's nice. I've been in the opposite situation where it hits by a pip and then reverses. But in this situation, it almost hit my stop. It didn't. So far, so good. And I'll just be waiting and seeing on pound dollar. Dollar Canada. This is good. So, in both pound dollar and dollar Canada, I'm short the U.S. dollar. In pound dollar, that means I'm going long the British pound. In dollar Canada, that means I'm short dollar Canada. Here, I'm short of this level. I won't move to break even, so I still have risk exposure on this. I'll move to break even once we can close at or below 0848. So we still have, right now we're at 0885. So we got about 40 pips to go, 43 pips. And then I can move my stop from here to break even and de-risk the trade. So that's always what I'm looking for. I looked at the rest of the Forex market, and I didn't really see any opportunities. The euro's moving a lot, but I'm not going to enter that. I missed that opportunity. It was a news-driven opportunity, so it didn't come up on my technical radar. So I'm in these positions, 1, 2, 3, 4 positions at the moment. 2 of them are de-risked, so I still have 0.5% of my account balance. I still have risk exposure on dollar Canada and Kiwi yen. Still have risk exposure on those. I'm risking 0.25% per trade. So if all my stops got hit, I will lose half of my account, 0.5% of my account balance. Pretty conservative trading. That's the way I like to do. I can safely trade with a larger amount and minimize my drawdown in doing so. That's about it for the trades for today. Any questions you have, join us at InformedTrades.com. Best of luck in your trading, and we will see you tomorrow. Take care.